Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the financial mysteries of the business world. And today we're diving into Apogee Therapeutics' latest moves, which involve a whole lot of money and a peek into their future drug trials. So strap in, it is going to be a wild ride. Before we dive in, if you like getting these clear, no-nonsense breakdowns of what it all means, make sure you are subscribed. And hey, why not join our Discord community linked in the description below, where we talk all things corporate finance. Alright, so Apogee Therapeutics, they are a company that's in the business of developing new medicines, and they just had a pretty significant event. They announced a big stock offering, which is essentially them selling more of their company's ownership to investors to raise a ton of cash. This is a common move for biotech companies that need funding for their research and development, especially when they are in the clinical trial phase, which they are. So, on the 8th of October 2025, Apogee inked a deal with some big name financial firms like Jefferies, BofA Securities, Guggenheim Securities, and TD Securities. These companies are acting as underwriters, which means they are essentially the middle. People who help Apogee sell their stock to the public. They agreed to sell over 6.9 million shares of Apogee's common stock at a price of $41 per share. On top of that, they also offered pre-funded warrants, which are like options to buy shares later for investors who wanted to buy at a slightly reduced price. Now, here's where it gets really interesting. After all the fees and expenses are taken out, Apogee is expected to bring in a whopping $323.3 million from this offering. That is a massive amount of capital, and it signals a significant financial maneuver for the company. This is tea small potatoes. This is a strategic move to fuel their growth and operations. This whole stock sale was actually part of a pre-approved plan. They had a shelf registration statement ready to go, which allowed them to quickly sell shares when the timing was right. Think of it like having a pre-approved credit line you can tap into when you need it. This shows they were prepared for this fundraising event. The offering is expected to wrap up on the 10th of October, 2025. But it's not just about the money. This report also gives us a look into what Apogee is actually doing with that money, or rather, what they plan to do. They've provided updates on their clinical trials for a drug called Apogee 777, which they are testing for conditions like atopic dermatitis, that is a fancy term for eczema, and asthma. They're expanding the patient group for one of their trials to 320 people, which means they are committed to gathering more data. They anticipate finishing up enrollment for the mid-stage Part B trial for atopic dermatitis by the end of this year. This step is crucial for validating the effectiveness and safety of their potential new drug. And more importantly for investors, they've given us timelines for when we can expect results. They're looking at releasing the key findings, what they call top-line data from the maintenance part of their part, a trial in the first quarter of 2026. Then, in the second quarter of 2026, they plan to share similar important data from the Part B trial. This is often when the market really reacts to a biotech company's progress, so these dates are definitely worth noting. They are also expecting data from their phase 1B trial for asthma in the first quarter of 2026, so it looks like 2026 is shaping up to be a very big year for Apogee, with potentially significant data readouts across multiple programs. This implies a busy and potentially rewarding period for the company. Now, let's look at the details of that underwriting agreement. It basically lays out the terms of how these shares are being sold. It's a standard document in these kinds of transactions, covering things like the price, the number of shares, and the responsibilities of both Apogee and the underwriters. Think of it as the blueprint for this massive fundraising event. And here is the form of the pre-funded warrant. These are designed to give investors the option to buy shares at a fixed price later on. The key detail here is that holders of these warrants can't exercise them if it would make them own too much of the company, usually capped at a certain percentage to prevent anyone from suddenly gaining a controlling stake. They can adjust this cap, but it requires advance notice. It's a way to manage ownership dilution. Finally, we have an opinion from their lawyers, Gibson, Dunn and Crutcher LLP. This is essentially a legal stamp of approval. The lawyers are confirming that the shares and warrants Apogee is selling are legally valid. It's a crucial document that reassures investors that everything is above board from a legal standpoint. So what does all this mean? Apogee Therapeutics is clearly in a growth phase, aggressively raising capital to fund its drug development pipeline. The $323.3 million infusion is substantial and should provide them with ample runway for their clinical trials. The projected timelines for trial data in 2026 are critical catalysts that the market will be watching very closely. The success of Apogee 777 in atopic dermatitis and asthma could be a game. changer for the company, and these trial updates suggest they are making steady progress. However, the biotech world is notoriously risky. Clinical trials can fail, regulatory hurdles can be immense, and competition is fierce. While the capital raise provides a buffer, the ultimate success hinges on the clinical data and the ability to bring a safe and effective drug to market. The market's reaction to the stock offering itself, while positive in terms of cash in hand, also dilutes existing shareholders' ownership. Investors will be weighing the benefits of this capital against that dilution and the inherent risks in drug development. In conclusion, Apogee Therapeutics is embarking on an aggressive growth strategy, bolstered by significant new funding and armed with a clear set of milestones for its key drug candidates. The next year or so will be pivotal as they aim to translate promising research into tangible clinical data. Whether they can navigate the complexities of drug development and deliver on their promises remains to be seen, but they've certainly positioned themselves to take a shot at it. Alright, that is our breakdown of Apogee Therapeutics' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. And don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.